November 8, 2022. A crypto exchange holding billions of dollars in customer deposits has just frozen withdrawals. Traders are refreshing their screens, watching balances they cannot touch. Somewhere in the Bahamas, the man who built this exchange is still telling people it's all fine. It isn't. 3 years earlier, the story looks nothing like this. Sam Bankman-Fried founds FTX in 2019, a cryptocurrency exchange built to be faster, cleaner, and more trustworthy than its rivals. He is already running a separate trading firm, Alameda Research, founded in 2017, 2 companies. One founder. That overlap will matter later. FTX grows fast. It signs celebrity endorsements. It buys a Super Bowl ad. Bankman-Fried, disheveled in cargo shorts, is profiled as crypto's responsible adult, the one who wants regulation, who testifies before Congress, who talks about effective altruism and giving his fortune away. By January 2022, FTX is valued at $32 billion, roughly the GDP of a mid-sized country. Investors line up. The exchange looks from the outside like the safest place in a famously unsafe industry. Behind that image, the 2 companies are not as separate as they appear. According to the SEC's later complaint, Alameda Research was given a special exemption from the risk controls that governed every other account on FTX. Court filings show it could hold a negative balance, could borrow, in effect, without the automatic liquidation that would stop any other trader. Prosecutors allege that exemption became a pipeline. Customer deposits made on FTX, money that traders believed was sitting in their accounts, was allegedly funneled to Alameda to cover its trading losses, fund venture investments, buy real estate, and make political donations. None of this shows up as a headline number on a balance sheet. It shows up allegedly in FTX's own token, FTT, used as collateral to make Alameda's finances look sound. A token FTX itself created and controlled. Collateral that could evaporate the moment anyone stopped believing in it, and this is where the paper trail begins. For most of 2022, nobody outside a small circle knows any of this. The exchange keeps operating, customers keep depositing. Then, on November 2, 2022, a crypto news outlet publishes a story built on a leaked Alameda balance sheet. The story is simple. A huge share of Alameda's assets isn't cash or established currency. It's FTT, the token FTX prints itself. The market starts asking a question it hadn't asked before. What happens if that token isn't worth what Alameda says it's worth? 4 days later, the CEO of a rival exchange, Binance, announces on social media that his company will liquidate its own FTT holdings. It is not framed as an attack. It doesn't need to be. The announcement alone is enough. Traders start pulling their funds off FTX fast, and FTT's price starts falling. This is a bank run, digital and instant. FTX needs to pay out customers who want their money back. According to court testimony, the funds to do that were not fully there. On November 8, FTX halts withdrawals. Binance signs a non-binding agreement to acquire the exchange, a lifeline extended within a single day of the crisis becoming public. It doesn't hold. By November 9, after a look at FTX's books, Binance walks away. What Binance's team allegedly saw was not a liquidity problem. It was a hole, a shortfall between what FTX owed its customers and what actually existed to pay them. Prosecutors would later put a number on that gap. Roughly $8 billion in customer funds unaccounted for. $8 billion enough to run a small national government for a year, gone from an exchange that had marketed itself as the responsible one. On November 11, 2022, FTX, Alameda Research, and close to 130 affiliated entities file for Chapter 11 bankruptcy. Bankman-Fried resigns as CEO. The company that replaces him in bankruptcy is run by John Ray III, the same lawyer who oversaw Enron's collapse 2 decades earlier. His filings describe FTX's internal controls in blunt terms, a company, in his words, with no reliable accounting for where its money actually was. For weeks, Bankman-Fried gives interviews. He calls it a mistake, a failure of oversight, not a scheme. On December 12, 2022, he is arrested in the Bahamas. 10 days later, he is extradited to the United States. What follows is the part investigators call flipping. Caroline Ellison, CEO of Alameda Research, pleads guilty and agrees to cooperate with prosecutors. So does Gary Wang, FTX's co-founder and chief technology officer. So does Nishad Singh, the company's director of engineering. Three of the people closest to the money agree to testify against the one person who built the company around them. At trial in October and November of 2023, the picture prosecutors present is not one of a single catastrophic error. It is described as a pattern. Customer funds allegedly used to plug Alameda's losses, to fund loans to executives, to back investments that had nothing to do with running an exchange. On November 2, 2023, 1 year to the day after the story that started the run, a jury convicts Sam Bankman-Fried on all 7 counts of fraud and conspiracy. In March 2024, he is sentenced to 25 years in federal prison. The aftermath spread far past FTX's own books. Retail traders, some of whom had moved their life savings onto the exchange because it seemed like the safe one, are still working through bankruptcy proceedings to recover what they can. The case reshaped how the crypto industry talks about proof of reserves and how regulators talk about exchanges that also run trading arms on the side. The red flag to remember is this one. Whenever the company holding your money and the company trading with your money are run by the same small circle of people with no wall between them, the balance sheet you're shown may describe a fiction dressed up as an asset. FTT wasn't cash. It was a promise the company made to itself, and the moment outsiders stopped trusting that promise, there was nothing underneath it. This case file is closed, but there's always another one. Follow and subscribe to the Paper Trail, and I'll see you next week with the new exciting stories.